Lesson number 16, learn Nadex binary options. In lesson number 16, you will learn what Nadex binary options are and why to trade them. You will also learn how to hedge S&P E-mini day trades with Nadex binary options and how to place trades using them to hedge your S&P E-mini trades. Okay, so first off, this is Nadex right here, okay? Go to nadex.com. They are the exchange, okay? Just like the New York Stock Exchange. When you sign up, you could sign up for a demo account, but you're actually signing up directly with the exchange, okay? Commissions are, I believe, 90 cents a contract, and then they top out at maximum $9. So if you do 10 contracts, it's $9. If you do one contract, it's 90 cents. If you do 100 contracts, it's $9, okay? So commissions are very cheap. On the flip side, you will have a little wider spread than normal, okay? But open up a demo account. Maybe go here, read the education, the spreads, all that. But I'm going to give you a quick rundown of what Nadex binary options are. So when you log in and you actually have a Nadex account and all that, you're going to have a screen. Now you have a couple different things, okay? So you mainly have indices, okay, binaries and spreads. Now, let me take one step back. What products can you trade? Well, these mimic the S&P E-minis, the Dow futures, the NASDAQ, crude oil, gold, silver, soybeans, natural gas, all these different future commodities, and they are just a derivative of them, okay? What they are is a yes or no. Is price going to close above or below this price at this expiration date? Yes or no. That's all they are, okay, on the binaries. Now, the great part, normally with binary options, what happens is you could only, once you place your bet, you can't change it. It's in there. It's kind of like betting on a football game, okay? Once you've placed the bet, you need to wait until time expires, right? Either the football game or this. Is price above or below your yes or no? Okay, so let's say price is in 1950. You buy the 1960 binary calls, okay? You're saying price will close above 1960 at expiration. If at expiration, the binaries are in 1961, you'll make all your money. If they're in 1959, you lose all your money. Now, you might make a bet where you risk 40 to make 60, or you risk 60 to make 40, however, okay? But if it's out of the money and price needs to rise, it's going to be a cheaper binary, right? Well, with Nadex, it's the same concept. The only difference is you're able to trade in and out of them. There's no day trading rule. Your margins are minimal, whatever you pay for, right? Sorry, for the binary is all you need to put up. So let's kind of dive into this. So the binaries, right? You have the China, the FTSE, Germany, Japan, right? So we'll go to the US 500. We'll do the daily, okay? I left click it. It's going to pull up all the contracts that are available, okay? I'll bring this down so you can see all the different contracts. Well, look, we have the 1974s. Well, the bid is $6.50. The offer is $12.50. Well, guess what? We know we're in 1940 right now. These expire the same time at 4:15 tomorrow afternoon, right? It tells you they're the dailies. Well, if I click on it, it's going to pull up a ticket. With this ticket, it's going to give us a bid and offer, right? So let's say I want to buy this. I would click that. Size is one contract. I could do as many contracts as I want, right? And then it's at $12.75. we look down here, my max loss is $12.75. My max profit is at $87.25. Now, here's the thing. If prices above $19.74 come tomorrow, okay, then by 4:15, I'm going to make $87.50. If it's below, I'm going to lose only what my risk is. They're very similar to regular options, but you don't have to worry about the time decay, the specifics of an option, okay? Now, let's say price rallies to 1960 overnight by tomorrow morning. Well, this contract will probably be worth about $35. So what I paid $12.50 for, I should be able to sell for around $35, okay? Now, one of the things is if you look at the in the money, okay, where price currently is, you're usually going to be right around that 50-50. Okay, so if price on the E-minis are in 1940, okay, you look at 1941, it'll be 50 by 51, 53, whatever, okay? But again, these are tight split because somebody has offering right here. But the 1944s are 40.75 by 47, okay? Again, cheap commissions, but you do get a little wide spreads. But this is a great way where, hey, I could bet 47.50, right? Or sorry, 47.75 saying, hey, I think we'll close above 1940 by close tomorrow. But guess what? If we're in 1960, this will probably be worth maybe 60 by 67, right? And I just made 50% on my money of what I'm risking. Okay, maybe less than that, but you kind of get the understanding of it. And all I need to put up is however much I have available to risk, okay? So look, sometimes these are great trades for like long shots. Hey, if you think the market's going to tank again tomorrow, you could then bet on the bid, right? Click the bid for it to go lower, $81, right? Your max loss is 19, your max profit's at 81. If we're below 1914, okay, by tomorrow, you can actually, you'll make $81 off a $19 bet, okay? Now, you also have what's called spreads. These I like even better, right? For those of you with low dollar account, but you can't day trade the SPY, right? Because you have the day trading rules. Well, what happens is you actually could come trade these, and you buy one contract. It's very similar to buying 100 shares of SPY, right? So if the E-minis, and you could see down here, 1940, these are the index, right? If this goes from 1940 and 1950, that's 10 points. If I buy 100 shares of SPY, okay, that's going to be $100. Well, I could come over here and buy the 1940, 1980, okay, or sorry, the 1920, 1960 for pretty much the very similar price to what the bid ask is, right? So if we rally 10 points, this will now be 1950 by 1950.50, okay? As you can see, you have very tight bid ask spreads. They're usually about 4 cents, okay, which would be $4, but it's a great way to define your risk. Now, my max loss, if I buy this, right, I buy one contract, my max loss is 207, right, because I have what's called a floor and a ceiling. My floor's 1920, my ceiling's 1960, okay? Well, if we go all above 1960, I can make $193, right? It's a way for me to limit risk. Also, to buy this contract, I'm only putting up $207, the maximum of what I could lose, okay? Now, think about this, okay? Let's kind of take it one step farther, okay? Actually, real quick, let me back up. As you could see, 1940 by 1980, is 50 by 51. Okay, 50.7 by 51.2. The reason is because we are at the floor and there is premium built into it, right? Because we're at the floor. So there's got to be some risk for the counterparty, right? To kind of take to help them hedge. But if the best way to trade these is to trade at the money, right? Something like this, where it's at the money. If you're looking for maybe a 5-point bounce, right? For this to go from 1940 to 1945, it's $50. You would just buy these, right? Maybe you want to risk $50. Well, you would just say, hey, if this gets to 1935, I'm out. Okay. Now let's take this one step farther and go, how do we hedge these? Okay, with our Thinkorswim. Well, think about it for a second, right? If I could buy, maybe I'm bullish on the market, but I want to protect myself to the downside, okay? Well, I could come over here and I could buy the 1940, I would actually sell the 1940, 1900 put spread, right? Because if I do one contract, I have a max loss of $104, right? Well, my max profit would be $300. What I then would do is I would go long one E-mini future, right? But here's the thing. The ratio is 5 to 1. 5 Nadex contracts equals 1 E-mini future to give you that perfect hedge. So the question is, if we rally to 19, so right now I could lose $520, right? Well, if I buy one future contract, my break even is 1950. Okay, I need the stock to the E-minis to rally 10 points for me to make up this $500 that I would lose here, right? Because if we close above 940, I would lose this max loss. Okay. But think about, there's a lot of time. If we rally 20 points overnight, I make 1,000 here and I lose 500 here. But let's say we fall down to 1900 overnight, okay? By tomorrow morning, we're trading in 1900. The market falls 40 points. Well, think about it. I'm going to lose 40 S&P points, which is $2,000 here, but here I'm going to make $1,400, right? Because I only have a max loss. So it helps me to hedge. Now, do you want to do these overnight? No. The reason I'm telling you about this is because intraday, they trade 2-hour contracts, okay? So they'll have like ones that if it's 10 in the morning, they'll expire at noon. Okay, so they're good for 2 hours. When you start to get to the last hour or so, this is where you want to put these trades on, because you'll be able to put a trade on like this where you could go long the E-minis at 1940, right? You could buy the floor, okay, of 1940. Instead of it being at 35, right? 30, we'll say 1937. Okay, will actually be where it's at. So what happens is you actually could go long here, and you only need the market to move up about 1.5 points, okay, to cover your max loss of $150. I'm sorry, 3 points, right? So if you rally 3 points, then what happens is this is actually going to offset that loss, right? And then what you could do is you can actually cover your E-minis, lock in 3 points profit, and there's still some value here, and then maybe look for a price to retrace and sell these, maybe take a $50 loss, okay? But that's the gist of Nadex and how to trade them using the S&P E-minis. Okay, but I definitely would say go to nadex.com, learn about them. They're a great trading vehicle. Next up is going to be lesson number 17.